Good morning. Let's make a brief technical and fundamental study on EDAC. This is the chart since the IPO, which was here in 1985 at about $6 a share. And the stock had this big bull run here in 97 and 98. And then it went down to almost previous levels of this huge bull run. And now it is bullish again and set for a big rise, I believe, as it happened here in 97-98 period. Over the short term, we can see that the stock is above the 50 days and the 200 days moving average, so the trend is definitely bullish. We had this golden cross here, which is the 50 days crossing above the 200 days moving average, and volume has been above average too here with these two big white Marubozus. So definitely technical analysis says this stock is a buy here. Probably the stock is quite overbought now. Perhaps it will have a consolidation period now, but I don't like to predict that because that's somewhat unpredictable. Let's check the fundamentals to get a long-term picture of this EDAC. Okay, jumping to my evaluation model, these yellow lines are known facts, white lines are my estimates, and these dark yellow lines are calculated by this Excel spreadsheet. So the stock is now at 875. Let me check that again. EDAC, yes, 875. And there are 4.58 million shares outstanding now, and I expect this share count to grow about 1% a year going forward. That has been the case lately. Let me see here on this 10-year summary. Then down here to the number of shares outstanding. You can see it has remained fairly stable. It is 4.58 million now here in 2007. So there's no history of heavy dilution, which I welcome. So just 1% a year, which gives me 4.7 million shares in late 2009. That is 3 years from now. Revenues are growing. I expect them to grow 18% a year going forward. They grew, let me check that again here. They grew, oh, just a second. They grew 28% here in the calendar first quarter, but the historical growth rate is less than that, about 18% since 2003. So I've considered that for the future, which gives me a final revenue of $67 million in 2009. Initial net profit margin, this is the net profit margin of the fiscal 2006, was 4.1%, and I expect this to expand to 7.5% 3 years from now due to revenue growth. It was 6.3% here in Q1, so 7.5 seems appropriate. And with all this, I get a final net income of $5 million, which means $1.06 per share, earnings per share, with a earnings per share multiple estimate of 23.29, which is the industry average. Let's check here on Yahoo the industry average. We're talking about a 40 million market cap, so this is really a small company yet. And the aerospace and defense products and services industry trades at 23.29 earnings multiple, and that's what I have here on my model. And this tells me this stock will be at $24.60 in late 2009. Which means it will rise at 41% average annual pace. And with this information I get to the optimal selling price of $15.76. This is the price where this share price compound annual growth rate would start being lower than 16%, which is my minimum threshold. So I would sell it at $15.76. The stock is now at 875, so very attractive here. I give it on a 1 to 10 scale, I give it an 8. Thank you.